Welcome to another episode of the Real Estate Podcast with me, Nico James-Bock, a broker with Royal LePage Signature in downtown Toronto. In this podcast, in this episode, I want to discuss the January 2023 market stats. There's been a lot of noise surrounding these stats. That noise will continue into March, beginning of March, when the February stats are released. So I wanted to record this video to analyze the data, because that's really where the news lies, not in the headlines, but in the actual data. So the data from the Toronto Real Estate Board, Regional Real Estate Board, is quite clear. And I've been tracking the data on a daily basis. So I'm going to give you the facts relative to what's been going on in the various markets. So I'm going to share my screen. For those of you who are actually watching this on video, you can follow along. The audio version will have frequent references to the charts that I'm going to share. So they'll also be available on the blog post. Okay, so January 2023, market stats explained. I want to first just get a view of the first slide, which shows GTA market stats. Important on this particular slide is the average sale price. So $1,038,668. The average days on market shows 29. The number of sales year to date, 3,100. Okay. In the condo corner, average sale price for condominium at the end of January 2023, 687,696. So that shows a decline of just over 8%. If we now go to the TRREB Market Watch for January 2023, we see again the average price of all properties is $1,038,668. The news headlines show a steep decline in the average price. January 2022, the average price for all types is $1,242,793. Okay, so yes, that seems to be a shocking decline, but that's not really where the news lies. You have to understand that year over year comparison, selecting just 1 month isn't really helpful. It's not really relevant. The only people who may take notice of such a price change are those buyers and sellers who either bought and or sold in January 2022 and bought and or sold in January 2023. So those are the individuals that will feel the difference, that will notice the difference in the average price. Everybody else, basically, it's business as usual. The average price of all properties is going up. If we look at the TRREB average price trend line, this trend line goes all the way back to October 2018. So if you see the average price hovers around 800,000 in October 2018, if you continue all the way up to January 2022, you'll see that there has been a steady increase. In January 2022 and going into February 2022, you'll see the sharp increase in price appreciation. Then, shortly thereafter, you see the sharp decline in prices. That switch occurred when the bank made its first interest rate announcement. So that decline continued throughout 2022. It starts to level off in May and actually August of 2022, you'll see it leveling off. And that's because buyers have had a chance to get accustomed to the price increases in interest rate, which continued from March all the way till the most recent announcement, which was January 25th, 2023, which had a 0.25% basis increase. The next announcement is March the 8th. So as I mentioned in the previous podcast, we're expecting there to be no interest rate increase, but who knows? There might be another small increase, or there may be no increase. The fact remains is that the price appreciation of a property is through time, okay? Not from 1 year to the next, but from the past 5 years. If you go back 3 years even, that's where you see the actual change in average price. So if I go back to look at the micro market analysis, so the figures that I gave you before are for the macro market, which is the GTA. So the macro market is huge, and a lot of those numbers are conditioned by Toronto. Toronto is the biggest, most concentrated market, especially of condominiums. So it has a great influence over the average price that you see in the macro market, but it doesn't tell the whole picture. If you go to the micro market analysis, which is really where all the details come to the forefront, I've chosen a sample grouping of micro markets. So condo apartments in C1. C1 is the area bordered by Bloor Street in the north, roughly Roncesvalles in the west side of Yonge Street to the east, and Lakeshore Boulevard and Queens Quay to the, or Lakeshore Boulevard and Queens Quay, yes, to the on the southern border. So that's the condo apartment in C1. The number of sales is only 146. So you can see that inventory levels are still playing a huge role in not only the number of sales reported, but also in the average price of such a report. So the number of listings was 646, also historically quite low, but typical for a January debut. The winter market is typically the time when fewer listings come to market. So consequently, the number of sales will also be down. The average sale price for a condo in C1 is $790,991, which is markedly higher than what we saw in the condo corner of just Toronto, or the GTA at 680. The months of supply is 4.42, so quite healthy number of condos. The condo inventory market is it's low, but enough to satisfy the demand, unlike the detached market. So if you go to the detached market in Mississauga, detached properties, the number of sales was only 76. So if you consider the whole city of Mississauga, with the number of sales being 76 and the number of listings only at 251 in the month of January, it's clear that inventory is playing a huge role in the figures. The average sale price, however, is quite high at $1,379,588, and there were 3.3 months of supply. So we're still in a seller's market in both the Toronto area as well as the detached portion of Mississauga. Detached in Whitby is showing a slightly different story, where sales are leveling off at 49. Now just think of that for a moment, 49 sales in Whitby of detached properties, just 49, with number of listings at only 83. The average sale price in Whitby is $1,097,339. So that sort of falls in line with the GTA average. If you go to semis in EO1, EO1 is the area south of Queen Street East. east of the DVP, and once again, along Lakeshore. Semis in EO1, there are only 10 sales during the month of January, and only 15 listings. Only 15 semis listed in the month of January. The average price at $1,135,100. So that's slightly above the GTA average, but only 1.5 months of supply. So obviously that's reflecting the number of listings that are on the market. That's 2023. The last micro market is semis in Brampton. So semi-detached in Brampton, they're showing the number of sales at 45 and the number of active listings at 66. The average sale price for a semi in Brampton came in at $915,944. So all of these figures are at a market contrast to what happened in, say, October of 2020. In October of 2020, if we look at condo apartments in CO1, just as one example of a micro market, we saw that in January 2023, the number of sales, 146. In October of 2020, the number of sales was 340, okay? While the number of active listings in October 2020, 1,844, compared to only 646 listings in January 2023. So this is where the market is going. This is the actual news, okay? It's the number of sales, the ratio between sales and active listings, the months of supply from month to month. So we're talking about January 2023. The February 2023 stats will be in within the first week of March. I'll have those for you within the first 8 to 10 days of March. And those show a similar story, but they will show that sales and active listings are actually up. So as we're nearing the spring market, which officially started, unofficially started, I guess, February 15th. I use that date simply because that is usually when we as realtors notice the most significant change or uptick in activity. I've noticed it. I've spoken to other agents who have noticed it, and so that's why I use February 15th as the unofficial start of the spring market. So when we see the February stats, I'll have a chance to compare them with the January stats, and then you have a good idea of where things are headed in the first quarter of 2023. Next, so the key points to consider with regards to January 23's stat are as follows. So number one, the first thing that we have to take into account is the fact that when comparing January 23 over January 2022, with the impact of higher borrowing costs over the last year, prices and volumes are down considerably. Yes, that's not news, that's just a fact. The only people affected by this fact are those that bought and or sold in January 2022 and again in January 2023. Number two, the longer you hold on to real estate, I say this all the time, the greater the appreciation. Real estate is a long-term investment. If you hold on to real estate for just 1 year, you're not going to notice anything. The BOC rate announcement is on March the 8th, 2023. So that's also a fact. We know that's coming, and it's just over or under a month away, like 3 weeks. Number four, residential real estate values are in a holding pattern in most submarkets with slight appreciation owing to time, aggressive pricing, and proper presentation. So things are still selling. Number five, demand for housing continues to remain strong as active listings continue to be well below seasonal levels. There are currently fewer than 10,000 homes of all types available across the GTA, leaving the region with only 3 months of inventory. The Toronto Regional Real Estate Board did not register another listing. If they didn't register another listing, we would be sold out of product in just 3 months. That's what 3 months of inventory means. 3 months is still considered a seller's market. And even with the headlines reporting a slower market, homes continue to sell quickly. And in some cases with multiple bids. So as long as the property is priced properly, as long as the property shows well, and as long as you actually present that property to the most number of buyers, because the buyers are out there, then it will sell. And in some cases, in some pockets, some micro markets, there are multiple bids. It all depends on presentation, pricing, and the strategy used for selling the property. The current metro area population of Toronto in 2023 is 6,372,000, okay? A 0.93% increase from 2022. In the 2022-2024 immigration level plan, Canada aims to welcome from 360,000 to 445,000 new permanent residents in 2022, from 380,000 to 465 in 2023, and 390,000 to 475 in 2024. So where are these people going to live? Okay, we saw from the micro markets that there were relatively fewer sales and active listings because the inventory is just not there. All right, so there's going to be a huge challenge to house it's already a challenge to house the people that are already here. A huge challenge. The condo market is barely keeping up, barely. When all of these immigrants come into the city, they're going to need a place to live, and most of them will center around Toronto and neighboring communities. Okay, we don't have enough housing for them. Okay, so it'll be up to the powers that be that are planning for new housing and affordable housing. It's all up to them, basically, how quickly they can get that product to market. So that is basically all in a nutshell. I will, as I said before, we'll be sharing the market stats for February shortly after the start of March. As usual, you can reach out to me through my social network channels, Instagram, Twitter, and my real estate business page on Facebook under Real Estate with Nico. You can just email me or text me, and you have all my contact information. And my contact information is also on my website and at the end of this video presentation. That's it for now. I will be in touch. I hope you enjoy the rest of your day. Ciao.